Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar continues to fluctuate after recently retreating from its topside target at 68 cents, which has temporarily dampened the bullish sentiment. Further weakness could be seen, but this may be given an opportunity for the bulls to return, that is around 66.80. I do anticipate from here could see a further bullish case and see the market rebound from 66.80 and look on towards 68 or even higher if we view the weekly time frame onto around the region of 69 cents. Viewing the economic data, Australian unemployment rate in June was seasonally adjusted to 4.1%, as the Australian Bureau of Statistics reported earlier this morning, as the economy added around 50,000 jobs, significantly exceeding the forecast of 20,000. The euro still maintains a bullish bias as it now clears the level of 109 and looks on towards 109.55 as the dollar index retreats to 103.75 this morning. Given how the pattern is bullish, I feel the market has potential of clearing this level and maybe pushing on to around 110.15.60 before profit taking emerges, as the indicator is relatively high. But overall, any pullback at the moment views support around 108.85. In Wednesday's price action, the market crushes the level of 156.40 and now nearly achieves its target of 154.70.80, but has rebounded slightly from the intraday low today at 155.36. In light of how the market's performing, I still feel from this poll and flag that there is further weakness to come and looking towards this level of 154.70.90, which is a key level, as we should be closely monitoring for signals and adjustment to our risk management in case we see a further play to the downside, which could bring in a target around 150. So keep an eye on that level of 154.70. As the rebound emerges, resistance is seen around 156.45 to 156.85. Turning to sterling, it resumes its rally and claims the level around 130, as the technicals now a little bit to the overbought side. Nevertheless, given how the market is performing, I still feel the weekly target of 131 is achievable before profit taking emerges, with any pullback seen around 128.80 and minor support seen at 129.65. Having posted a record high, spot gold stages a retreat but holds above the key level of 2054 to 55, and while intact could see another upside rally onto 2500. But that being said, given the market's retreat from the top side of the uncharted territory of around 2,480, traders should still remain cautious given the high volatility and closely monitoring signals and adjusting their risk management strategies in case we see a break of 2054, as this could open the way back towards the bottom side of the range, seen around 2,400. But overall, I feel the market has extended a little bit here, but nevertheless, the key level is at 2,054 while intact, then 2,500 remains, even though the trend from the ADX is somewhat overheated. Wrapping up with oil, well, the market rebounds in front of that key level seen around $78.80.90, and from the bounce now looks towards its topside level at $82. Still be on your guard in case we see a break here, as this will see further stops and maybe see a rally onto $84 a barrel. But another rejection from 82 should keep the focus on the downside to that target as mentioned at 78.80.90. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the day.